Neither Better Trades or any of its personnel are registered broker-dealers or investment advisors. I will mention that I consider certain securities or positions to be good candidates for the types of strategies we are discussing or illustrating. Because I consider the securities or positions appropriate to the discussion or for illustration purposes does not mean that I'm telling you to trade the strategies or securities. Keep in mind that we are not providing you with recommendations or personalized advice about your trading activities. The information we are providing is not tailored to any particular individual. Any mention of a particular security is not a recommendation to buy, sell, or hold that or any other security or a suggestion that it is suitable for any specific person. Keep in mind that all trading involves a risk of loss, and this will always be the situation regardless of whether we are discussing strategies that are intended to limit risk. Also, Better Trades personnel are not subject to trading restrictions. I and others at Better Trades could have a position in a security or initiate a position in a security at any time.
Hello and welcome out to another Insights. We're going to start off like usual. We're going to be doing big guys today, by the way, in case you were wondering. I know I haven't really been on schedule, but I'm close this time. This is the closest I think I've been. Anyway, start off with a quote, and this is one I just happened to see, and I found it just the other day, and I love it. It says, "Sometimes our lives have been completely shaken up, changed, and rearranged to relocate us to the place we are meant to be." And this rings true, especially for me. As you all know, I don't necessarily hold back, and I share, some of my personal stuff that's happened in my life. And as you know, I've recently, actually 2 months tomorrow, I got married, and we're going to be moving in the next week. Let's say we're going to meet Sunday to finish the paperwork. And so Monday we're going to start moving. So we should be done by the Mother's Day weekend. Hopefully we'll be done or close to done by that time. So anyway, things get changed, and they go crazy, and things are chaotic, and it's kind of nuts. But it's fun, right? I mean, hey, it's life. It is what it is. It's like trading, right? You can't control what necessarily happens. You can only control how you react to it and how you respond to what you do next. So sometimes our lives are shaken up. Sometimes our trading accounts are shaken up. Sometimes they're shaken up in a good way. Sometimes they're shaken up in a bad way. So, but the point is that it's rearranged to relocate us where we're meant to be. If we have something that goes haywire or something happens in the market that's good or bad, it's designed to teach us something. It's there to learn. So take it for what it is. And with that being said, we're going to jump over to the charts. And for some reason, very, very few this week. I think there was 376 in the big guys, which has slimmed down a little bit. It was over 400 for a while. Just not a whole lot of patterns. And I think 3 or 4 of these are rollovers. So not sure what's up with this week. I don't know if it's earnings season or what. But, normally we have 15 to 20. We used to get 20 to 30. But just not a whole lot of action this week, not a whole lot of activity so far. So we will see. So this will be fairly quick. This is one of the smallest numbers I've had in a long time. Usually have at least 10. Typically 15 to 20 is a low number. So 9 is super slim. So like I said, not sure why, but it is what it is. So we take what the market gives us. So ADI, though, analog devices, this thing's just been going sideways for basically a month, if not more. And we're looking at the possibility of a breakout to the upside. You can see the bands are pinching big time. And the indicator's not really telling much. Stokes and MACD are basically neutral. 50's crossed above the 200, which is slightly bullish, but I don't put a whole lot of credence in that, or credibility, I should say, in that. So what we can see is, though, the short-term downtrend, or intermediate term, I would call that, actually, because it's a little more than a year, has been broken. But it wasn't really broken in a dramatic fashion. It was broken after this thing ran from 48 to 60 almost. I mean, it broke out this day, and then it's been going sideways, which may or may not be a good thing. It could just be a resting phase. The volume's getting lighter, which is a good, it's an indication of a resting phase. So will this push, this trend that we started back in, was that February, short-term trend, will it continue? That's the ultimate question. That's what I'm planning for. If it breaks out above that 59.40 area, then I'd say we're pretty likely to go up to about 62.50, that next level. So I like this one if it breaks to the upside. There's some of these that are just like I'm just lukewarm on. And we always have some of those. We always have some that are like, I'm not really that excited, or maybe earnings is coming up. There's a couple of those. This one, though, looks really good if it breaks to the upside, especially if it does it one day with a big candle, because then we're pushing the bands. So I like the looks of ADI at this moment. It just depends on what happens next. Allstate, this is one of those rollovers. We had that little miniature Head and Shoulders, broke the neckline last week, and we've run back up a little bit. It almost looks like we want to go up and tap it. Challenge here is that we have earnings in a little bit. What is that? A week from today. So we'll see what happens. So we will see what happens with Allstate. Colgate. Shrink that back down, making sure that we're recording still. Big bearish engulfing pattern about a week ago. That we've got a quasi falling through methods. I mean, the pattern is kind of there. It's a continuation pattern, and you typically want to see it in the middle of a downtrend. So seeing it right here isn't really necessarily that pattern, even though I still put a little bit of credibility to it, but just not as much as if it came somewhere, in, like, let's say here, or if we had a short-term downtrend. It's a line chart, but that looks like there might be a falling through methods type of pattern right there. So I don't put a lot of, like I said, a lot of credibility in it. But it does look like a downward move. We've got earnings coming up, though, here in just a couple days. So I have to be cautious of that. The 50-day moving average is holding. I don't remember seeing that before. I might have seen it and just didn't remember it. But I love that, because if it breaks the 50, we've got the 50 and a horizontal support level at 68.70 there. So usually the convergence of those things is a good thing, because it will either act as support, or if it breaks that level, it's more significant. Because when you have multiple levels of support or resistance that get broken, especially if they're all converging, and if it breaks it in a big way with big volume and a big candle, that is very significant. So I mean, it's almost like having a 3-foot brick wall versus just a plain one sheet of drywall. How hard is it to break through a plain sheet of drywall? I mean, you can punch your fist through it and not hurt. But a 3-foot brick wall, it's a whole different ballgame. So what we've got here is maybe not a 3-foot brick wall, but probably a 1-foot brick wall. And 1-foot brick wall is hard to break through versus a sheet of drywall. So if it cracks that, I feel pretty good about it. But like I said, the challenge is the earnings coming up in just a couple of days. So probably realistically have to wait for earnings on this. If you're up for a little risk, if you have a little appetite and you want to play it for a couple of days, then so be it. Now, granted, I have not confirmed the earnings, so that may not be 100% accurate. So make sure, when I say earnings, make sure you go double check. If this is something you want to trade, go double check the earnings date. Clorox. And honestly, just going back to that to refresh on this, I used to, when I first started doing the insights, when I found these, especially, I would go look through the options. And I was literally spending anywhere from 45 minutes to an hour and a half recording, because not only did I look through the charts, but I went and looked at the options, and I looked at every little detail there was. And frankly, it was overwhelming. It was too much. And the reality is that until one of these triggers, until there's an actual opportunity there, it's a waste. When you got 25, I used to have 25 to 30 in the big guys and about the same in the little guys, a little bit less. But when you go through that many charts and explain, and then show the options, which option I would look at and how far to go out and which ones have open interest, and it just became, like I said, overwhelming. It was just way too much. And having a 1 hour recording all the time was it was too intense. Not only for me, but for students. I had some people say they're just too long and there's too much detail. What you really need is a trading plan, and here's an opportunity, here's a trading plan. And that's essentially where I've kind of narrowed it down, even though sometimes, I mean, quite frankly, I love teaching. I love doing this. And I love doing all that detail. I love getting that detailed, but when there's so much detail that it overwhelms you, and that's what I had a couple students say, it's too much. An hour to sit down and go through all that stuff, it's great information, but some people actually told me they were fast forwarding to get to the next stock just to see, because they just wanted what you're seeing now. They just wanted the opportunity and the plan. And then if something triggers, then you go figure out the rest. And as soon as I heard that, I went, you know what, that's a good point, because that's how I trade too. I don't necessarily go through all the details up front and ahead of time and put everything in this, because then sometimes it changes. Sometimes you need to go pick a different option. So anyway, that is, if you're newer to the insights and you haven't been around for a while, and you didn't experience that back when I first started. I don't know, was that a year and a half, 2 years ago, 3 years ago, however long it's been. Seems like it's been forever, but um, that's why I don't do that. I know some people would like to have that, and it's overwhelming. So for everybody. But getting back to Clorox before I find too many squirrels. Um, there is actually a head and shoulders there. Maybe I'll see it: left shoulder, head, right shoulder. Let's see. You can see it right there. Interesting. I don't know that I noticed this, but of course it's kind of negated right now, so I'm not going to worry too much about it. Basically, what I'm looking at here, though, is that we've broken that support of 124.50, and we broke it a big way. Now, interesting thing is it shows earnings coming up on the 29th, but that big drop may have been earnings, and we need to double check that. I need to double check that and see if that's the case or not. If not, that might be a little warning sign that says, hey, earnings is not going to be that good. It's bounced back up here. We've got a nice little shooting star coming up to the resistance, and obviously it's right about 10 cents away from the entry point. So we'll see what the action looks like tomorrow, but be cautious. Double check the earnings if this is something you're interested in, and we'll take it from there. So Comcast will roll over. This we've been watching for several weeks, 3, 4, if not 5 weeks. We're sitting right on that downtrend line, and bearish engulfing pattern last week, and now it's just dancing sideways. Nice little dojis. Earnings supposedly tomorrow, so we'll see what action comes after that, after the earnings, and just take it from there. So Chipotle, or Chipotle, I should say. Nice little double bottom, just getting started. Up 282 today, a nice spike in volume. And yeah, indicators are kind of iffy. Bands are pinching. It's sitting, $2 out of the range, but you're also talking about, $32 of potential. So you could realistically justify about $3 to $3.50 of fudging the number. But Chipotle is a big, high-flying stock. I mean, $450. The options are not cheap. But you look at what happened last time. We had a little double bottom here. It went from 440 up to 527. So, I mean, you're talking 70, 80 points. That's a 15, 20% run. So, if we just go off the trading plan here at 475, maybe take out, last time it did it in 2-3 days. Ran 30 points, and then the next 5 days it ran another 40, 50 points. So it's entirely possible. It's just going to be very expensive to get into this thing. So, it's not much different than Alcoa running from 10 to 11.50, $12. But you're paying $1 or $2 for Alcoa. And there really isn't, relatively speaking, it's about the same. That's why it's not, I don't see it as a huge ordeal. CMG, it's just one of those things that typically I don't trade these big ones. Now I'll go look and see what CMG is, and maybe there's a great deal. And you know what, realistically, take a peek at it and look at maybe the 520s. 515, 520s, way out of the money, go out 4 to 6 months, they might be $15, $20 versus $30 or $40 for an in the money. I don't know. I haven't looked at options on CMG for a while, but never know. There might be a great deal, and if it runs to 520, it's at the money's right now. We're going for $25, and you can buy some 515s for say $10 for 3 to 6 months out, and it runs up to 520, and they sell for 30 or 40, and you paid $10 for them. You're probably pretty happy, but that's got to happen, and it's got to do the same thing that happened last time, and that's possible. It's entirely possible. Bands are pinching, and if it runs, it could run big. But the question is, woulda, shoulda, coulda. That's what every question is. We never know. So I like Chipotle. The restaurant's good. I don't go there very often because there's not one close to me, but when I get a chance, I go there. And, they've had the E. coli scare, which has contributed to that, going from 750 to 400 in a very short time. So this thing might bounce back. It might run back to $600-700. It's possible. Some people are probably looking at leaps right now. It might be a good opportunity to look out for a year and a half, 2 years, and go long term. But the question becomes, what's the overall market going to do? Because if the overall market gets beat up, if this economy turns south like a lot of people think it will, I'm of the opinion that the economy's weak, and one little thing could change it. So And restaurants are usually one of the first things people cut out. If you go out to eat, I go out to eat quite a bit. And if things change, if things get crazy and hectic, and even if there's money in the bank, but if the monthly cash flow starts to slow down, if you're used to making 10 grand a month, and all of a sudden you're only making 8, you could have $500,000 in the bank, but you're still feel like you're getting pinched because you have $2,000 a month less in cash flow. And so if that happens, if the economy slows down or people get laid off, one of the first things that go are luxury things that you spend on. And meals are not necessarily luxuries, but going out to eat is a luxury deal. It's one of those things where, it's not a Ruth's Chris Steakhouse where you're dropping $200-300 for a meal, but it's still, a lot of people will start eating in and not going out to restaurants like this. So it really is kind of market specific. Chipotle, if the market stays up where it is, Chipotle could very easily come back and rally back up to that 600-700 range. But if anything gets weak, it's probably going to go downward. So DTE, this is interesting. DTE Energy and Duke Energy, this one and the next one are almost identical. And you can see the rally that we've had in the energy thing, multi-utilities. We've had a sizable drop here in the last week or two. Relatively speaking, size was 91 down to 85, $6. About 10. No, not 10%. 10% would be $9. It's about 7-8%. But a big drop here for a couple days and then a rally. What it looks like we have the beginnings of is a falling through methods, and that's really what popped up here was the pattern. The pattern hasn't even actually formed. But anytime I see something like this with a big candle and 3 small days inside the body, that's the beginnings of a falling 3. So if tomorrow this thing gaps up and then starts to sell off, it's a perfect setup too, because if it gaps up in the morning up here to 86, $87, let me zoom way in. If it gaps up here up to 87 and then starts to sell, our entry point's not down here until about 86. So if it gaps up there and then starts to sell off, we have plenty of leeway. If it hits this alert and goes, boom, you're at 85, 93, you're going, whoo, if this thing keeps going during the day, we have a good setup. And you can see that this makes it even more beautiful. And Duke's about the same. Earnings is already behind us. We've got a couple of sell-off days, little resting days the last few days. We're below the 50-day. We've tapped the 50-day today. Look at the divergence on MACD. You got the high here just a few weeks ago, back early April, and the high on MACD is lower than the previous one. Even though the price is higher, the high on MACD is lower, which is a bearish indication, and it has been doing that for the last few weeks. It has accelerated to the downside, so I love the looks of this. Now, Duke is basically the same thing. You can see, there you go. It looks almost identical. The difference is Duke has not come out with earnings according to this. It still shows on the 29th. And you can see it's below the 50-day. It's pushing the bands. The same bearish divergence that we have there. Everything about it's the same. The only challenge is earnings coming up. So, and realistically, I've said this here before too, is that if you have a situation like this where you have two companies that are very similar, this is electric utilities, DTE is multi-utilities, but they are basically the same type of company. So if you're going to pick one, because if you go buy 10 contracts on DTE and 10 contracts on Duke, you're basically buying 20 contracts on one or the other. You're essentially in the same sector. The things are moving exactly the same. They're basically the same company, even though they're not. So keep that in mind. Don't go, oh, look, they both look the same. Well, yeah. If you get into 10 contracts of each and they both go backwards, you're going to get hit on both of them, if that makes sense. That should make sense. So personally, I'm looking at DTE because earnings is already behind it. Duke's got earnings coming up. So, and last but not least, excuse me, there's that cough cropping up. It's been good all day. Facebook. And you can see we got to there. Earnings is already behind us. You can see it gap down from earnings. It has continued to fall the last few days. It's breaking through that 109 area. We're looking at a potential of about 102. And you get here to the indicators. The price high was not significantly higher than it was back here, but the MACD high was a little bit lower. Not huge, but enough to make a difference. It broke through the 50-day today. Not a lot of volume, but you can see Stokes and MACD both accelerating to the downside. So this is looking pretty darn good at this point. I like the looks of Facebook. So with that being said, I'm going to sign off for the evening. Y'all have a great night, a great rest of your week, and we'll see y'all very soon. Bye-bye.